In this video, I'm not just going to tell you why you should never sell your Bitcoin. I'm going to pull back the curtain on a secret the wealthy have used for years that's finally available to everyone. I'm going to walk you through a proven strategy for building real long-term wealth. One where as you acquire valuable assets such as Bitcoin, you will not have to fear losing future gains by being forced into selling for cash just before the value potentially shoots up. So throughout this video, I'm going to show you how to tap into the value of your Bitcoin to get the cash you need today and still keep every ounce of the upside for tomorrow. So let's look at what we're going to cover. To prove this to you, we're going to address a few things. First, why borrowing beats selling with real numbers. 2, how borrowing against Bitcoin works step by step. And 3, the $50,000 mistake most people make when they sell their Bitcoin. Let's take an example. Think about your Bitcoin a bit like a golden goose that lays golden eggs. If you sell the goose today, you get a pile of cash, but don't have access to any golden eggs in the future. However, if you borrow against it, you get the cash today and you get to keep the goose laying the golden egg. One of the key principles that's important here is leverage versus selling. When borrowing against your Bitcoin, it means using your BTC as collateral for a loan without having to sell it. This gives you access to liquidity, cash for purchases, debt, or even investing. It avoids capital gain taxes. You don't create a taxable event. All the while you stay exposed to Bitcoin's upside potential. Okay, so now let's take a look at an actual example of the implications to your wallet if you were to sell your Bitcoin versus borrow against your Bitcoin. So let's assume that you need $50,000 in cash, that you currently own one BTC. You purchased that BTC for $50,000, and the current price of BTC is $100,000. Now, you have two choices to get to your $50,000. You can either sell your Bitcoin today or you could borrow against it. Let's look at the selling scenario to begin with. If you sell it, you will need to sell at least 0.5 BTC to get to your $50,000. However, as we know, as we've talked about, you will have tax implications of this sale. There will be $5,000 in taxes that you will owe. So therefore, you will have to sell 0.55 BTC in order to get your $50,000 in cash and have enough cash to be able to pay the taxes. So after 12 months, let's assume the value of BTC doubles over 12 months, and let's look at your net position. So we know that you were left with 0.45 BTC after what you had to sell, and now the value of that BTC is $90,000 in USD. In order to get a appreciation for the impact that that has on your wallet, let's look at the scenario where if you chose to borrow against it. Under this scenario, you would pledge your 1 BTC as collateral. By taking out a 50% LTV loan, you would get the $50,000 in cash that you need based on the loan. The key implication of taking out a loan is that, one, after 12 months' time, you are going to owe $50,000 in principal, you were going to owe $5,000 in interest, and you were going to owe $5,000 in taxes. But because we're using the same assumptions and BTC has doubled over the 12 months, let's look at the implications of your net position. Under this scenario, you will now end up with 0.7 BTC as the value has appreciated and you've had to sell less to cover your costs, and the total value of that BTC will be $140,000. So you will end up with a $50,000 benefit by borrowing against your Bitcoin compared to selling your Bitcoin. And the fact of the matter that you've been able to retain 0.7 Bitcoin compared to 0.45 Bitcoin just continues to compound as we look forward. And if we look at the value of that Bitcoin in year 2, assuming Bitcoin doubles again, you would have $280,000 worth of value compared to $180,000 worth of value. And if we go out one more year to year 3, you would then end up with $560,000 worth of value for your 0.7 Bitcoin compared to $360,000 worth of value for your 0.45 Bitcoin. So the point that I want to illustrate is that because of the appreciation and because of the value of Bitcoin, you want to hold on to as much as you can. And borrowing against your Bitcoin provides you an opportunity to do just that. For a long time, only big investors could borrow against the assets they owned, like stocks, real estate, or even businesses, because this sort of wealth investment tool was only available to those with massive amounts of capital. Average folks like you, me, were left out. If you had Bitcoin, you could either hold it or sell it, and that was it. But that's changed now with easy access to companies like Salt Lending that enable you to borrow against your Bitcoin. Bitcoin is part of real life now. People everywhere own it. Mark Cuban, Kevin O'Leary, our Shark Tank investors, and many more are all over it. And now it's tools like Salt Lending that make this all simple. You get to keep your Bitcoin, you get affordable loans, you save in taxes, and you don't have to deal with banks or sell anything. It's finally being able to use your hard-earned BTC when you need it most, without losing out on the future you've been working for. Anyone, yes, even you, can use their Bitcoin to solve everyday problems or expenses or emergencies or even invest in new opportunities. This is real, this is now. If you want to evaluate the impact on your wealth between borrowing against or selling your Bitcoin, access our free tool and run your own analysis. Visit the link below. And if this video has been helpful, be sure to like and subscribe below for more information from Salt Lending.